going towards. It wasn't going towards my take profit this thing, and then I just came out from the market. Like, I mean, I took my profit and then I closed. I didn't trade again. I'm like, is it a good thing to do when I've actually made my resistance and support line, and then I come out of the market either after or before it even hits the
okay,
that
awesome. That's awesome. All right, so I get the question very clear. For instance, let's say you do analysis, then your profit target for that setup is, let's say, $20, but then you are trading with a plan. Then at that day, your plan is supposed to make $10. So once you make the $10 and you don't want to over trade, you don't want to be greedy in the market, you can easily close the trade. You are not bound to strictly follow what you have drawn till the end of the journey. We also call it break even. So if you don't want to exit the market, what you can do is that you can trail your stop loss, which means if you set your stop loss, if it's a buy market, and you set your stop loss below your entry price, and then you want to allow the market to flow, you can put stop loss at above price based on how much you are willing to take on analysis basis and allow market to flow. So there is no problem if you decide to break even. Please, you understand? Because there are points in time where market will go to $19 and reversed. Come and hit your stop loss even before continuing up. It happens. And that also doesn't mean you should be scared or afraid. So there are points in time where people set their trade, take profit or stop loss. So they allow it until it hits stop loss or take profit. They don't do anything to the chart. It depends on your style of trading. All right.
Okay.
That's an awesome question.
Thank you.
Let's not be hiding our questions. If you're hiding your question, it may remain in your head for a very long time. All right. So Mr. Daniel is asking, please, can you set stop loss and take profit when trading synthetic indices? Yes, every trade goes with stop loss and take profit, or every trade should go with stop loss and take profit. Why? When you set take profit and stop loss, and maybe you are not with a machine, in fact, running stomach is even something that can invite you without you prepared for it. Light, especially with those using prepaid. Your prepaid can finish and then you will go to the nearby vendor point and you won't get it to buy. That's also another reason to set your take profit and stop loss. Another thing is that your laptop can break down. For instance, those of us using China phone, the little lower phones like Techno and stuff, where you just be there and the phone will go up by itself that is doing upgrade. When you are trading with that stop loss, and let's say market, how do I put it? Let's say market make a move, then you are not able to see, or the phone upgrade took more than expected period, you may lose trade, or market may go against you. Now, when you come to synthetic indices, stop loss and take profit will work on all assets, but boom and crash is different. For example, when you are buying boom, which is trading against the trend, when you are buying boom, and let's say market spike, I think I will demonstrate that at the appropriate time, because there's a time that we are going to learn how to trade some of those assets before we end the class. So when you put your price at, let's say, 5785 as stop loss, take profit, and then the spike was long, and go to, let's say, 6000, they will give you profit at 6000. They won't give you profit at 54 where you set your first take profit. Where the spike ends is where they will give you your take profit or your profit. Same as when you are trading the trend and a spike happens, and let's say your stop loss is at $2, but when the spike happened, it spiked down to, let's say, $5. Where the candlestick end after the spike is where your stop loss is set for you. That's the only difference in boom and crash with other synthetic indices. So at the end of the day, you can set it. All right. So the next question is, I was trading on my demo. I placed the trade and wanted to set SL and TP, but it couldn't work. Okay. There are many reasons why it may not work. Probably the price you are setting the stop loss or the take profit is too close. It's too close. So anytime you are going to do your stop loss and take profit, you take the spread into consideration, then take market movement, current price, and where market is going, the volatility of the market. Where you, let's say you bought at a certain price, and then you start seeing profit immediately. So if you want to set your stop loss, you need to know where to set it before you can even adjust. So if the price is too close, your stop loss may not work. If the TP is too close, your TP may not work. So I think we'll look at that as a point as well. So who is next? Let me mention.
Please, I have it.
Okay.
With respect to what you just said, I think I experienced that today as well.
Okay.
I was trying to set a stop loss and the take profits, but I read beneath where they confirmed to take. When I was entering the market, they've written, make sure your stop loss is about 50,000. It's something like the difference has to be about 50,000 pips. The difference between that was on the V75.
Okay.
The thing you do, yes. And so when I read that, I increased to that 50,000, and then I realized that now it's picked, and I was able to set it. So maybe, as you said, the amount of pips can be considered.
Okay, so that confirmed where I was going. All right, thank you so much. See, when it happened this way, then we are all conforming. We are coming into agreement with what we are learning, because it will not be like I just go and hide and take some information somewhere and then I'm deceiving you. You practice it, you challenge me. Then even I may make a point where you don't really get. Perhaps you go and do your research, you come and do a counter attack, and so that you can get the clarification very well. All right, so that's also an awesome contribution. Okay, so let me call Madam Fosti. Question. If you don't want to speak, write it. Then after that, who will go? We go for, is it Osam Himan's iPhone? Unfortunately, we say Osam Himan's. Okay, so I want to hear from those two people as well. For question, if you can't ask, you can type it and I'll read it and we address it together.
Hello?
Hello.
It's Fosti.
Okay. Well, the child wants to learn Forex trading.
Please let me type. The baby is disturbing.
Okay, that's fine. All right, so the child wants to learn Forex and you are now allowing him or her. Okay, so Mamata, you have unmute, so ask your question. Don't run away. Give us your question. or I ask you my question?
Oh, okay. Let me ask. Good evening. Please,
Okay.
what's the meaning of when they say take partial profit or lock
Profit.
in? Yes.
You see, so you have a question. I think I'll be doing this in every day. Okay, so that's fine. When they say lock profit or take partial profit, there are two things there, or there are options there. Now, let's say you are in the trade, the market is already in profit, but it is anticipated that markets can make a massive reversal at a point. So you can break even. So break even means you adjust your stop loss. If it's a buy market, you adjust your stop loss above your entry point. If it's a sell market, you adjust your stop loss below your entry point, which means that even if market reverses, it will not go against you for you to see negative. That's how you lock profit. Number two is you can, let's say you use one lot size and they say you should take partial profit. You can close maybe 0.5, which is half of the trade. So at that point you close half of the profit. So the rest of the trade keeps running, and which means that if negative wants to come, the negative will not come as using one lot size. Based on my experience or my understanding, that is how you lock profit. Or what's the other one? Break even, or something like that, or take partial profit. Thank you for your question. All right, so let me call. Since nobody wants me to ask questions, everybody has a question, but that's awesome. So, Madam, okay, Mr. Osam Hima.
Yeah, please, I want to ask, what is the best time to trade in Ghana here? What is the best time to trade?
Okay, what is the best time to trade? All right, so for me to answer that question properly, the best time to trade is when your setup calls you to trade. So the analysis you have done, the time the analysis comes that I'm now going to play is the best time you should enter the market. For instance, one of my students, they set analysis, and then the analysis worked, played when they are sleeping. We call it a missed setup. You miss the setup. But you can also do what we call limit or stop orders so that trade can execute for you. Now, when you are asking, it based on the asset as well. Some asset make some major moves at one point in other. Now, when we talk of synthetic indices, it's a 24-hour market. It opened at 12 a.m., closes at 11:59, and open at 12. So it's 24-hour market. But what you must do is to know when are the impulsive move, when is it a trending market for you to be able to make your money. Now, when we look at currency, we have the Asia, the London, and the New York. So if you are trading any of the time frame, then you have to prepare towards it like that. So between 5, 6, 7 is more or less like the Asian time. 9 through to 12, 1, thereabout is London session. Then 1, 2 to almost 5, 6 is the New York session. So those ones conform with our normal time. Or most of the trading goes with the London time, which is our time. So that's how the circle goes. With the currency market, there is high volatility between London and the New York session than the Asia session. But sometimes it varies, where you see major moves in the Asian session and minor moves in the New York session. or New York in the London session. We are coming to look at how to trade session. That's based on currency as well. Thank you for the question. Okay, so Fosti said, I'm a new learner, so I haven't got the whole concept yet. Oh, okay, so you can DM me. Let me try and see if I can re-summarize the whole concept to you through a voice note. You listen and listen again and see if you can. But then Baby Pips is there to summarize it. They speak, they write like they are teaching like crèche children, and they use funny. Those who read will tell they use funny informations to help you get the whole concept. All right, so if you can hear me, name or test two websites that I said as a trader you should use it like your social media. Give me just two if you were in class that day. Thank you. Please, I just want to ask that if you have a trade running now till 11:59 p.m., will your trade still run or it will cancel? Okay. All right. So brokers don't close your trade for no reason. They won't close your trade. So once you are in the trade, if it did not hit stop loss or take profit, that trade can be active for 20 years. But when it comes to currency, that one too, for a market close, it's just that nothing moves, like nothing will move on the chart. When market open, it may continue from where market started from, where you stopped, or based on the price interest rate in the market. That is when it will probably reverse at that point. So those are the things you have to look at. So the time doesn't matter, but then when it comes to another disadvantage or advantage, I don't know, advantage to the broker sometimes and advantage to the trader sometimes. When you are trading currency, it's a different ballgame. When you are trading synthetic too, it's a different ballgame. So synthetic, when it gets to 11, 12 o'clock, they charge what is called swaps. So it's just you hold a trade, they believe that the interest rate has changed. So they have some amount of money that they put there as a negative for you to pay. But if it is currency, it is based on the change in interest rate that determines the swaps. So with currency, you may get a positive swap or a negative swap. Those are the only thing. That is why some people don't like their trades to run over 11:59, especially in the synthetic market. Right, so that is it. Okay, so Botlab answered Madam Fosti's question. So we have, it is not investment.com, but either Investopedia or investing.com. Either Investopedia or investing.com. So we have a Baby Pips, that's correct. Press Factory is also correct. Bloomberg.com is also correct. Is it yes, the time is based on synthetic. I already said it's a 24-hour market, but based on the circular rotation, like 11:59 p.m. like to midnight, that's p.m. Yes, so 11:59. So who will I call next? Mr. Shadrach. Mr. Shadrach. Mr. Shadrach is not ready. Let's go for Ernest. He will talk later. Let's go for Ernest. Okay, Mr. Ernest, if your network is not good, then
yes, today I just logged in. I was late. Forgive me, sir.
Okay, we are only asking questions. Generally, from when we started learning, do you have any question for us to address for you? Okay, so Mr. Alright, so you can just send a chat. I will read it out. Thank you. Mr. Avivo, our admin. Do you have any question or everything is clear? Okay, Madam Foster is asking, how do you get the first video? Yeah, the one video is on the Telegram platform. The one video is on the Telegram platform. Okay, so all right, thank you, Liwanzi. Okay, so I guess we can continue. Okay. All right, so the trade was executed 13th July 2021, and then at that 13th July, market went into profit, but it couldn't hit the take profit. So this is the take profit here. This is the entry price. Okay, so if you were to take this trade, and then let's say you did not hit your stop loss, it means that you are still expecting market to go towards your direction and hit your stop loss. Now, how will you know the probability of price hitting your stop loss or your take profit or not? When you bring it down here, realize that this area is a resistance now. It's a resistance. So before market hits your take profit at this level, you are expected to, market is expected to break this level before it can hit your stop loss, your take profit. Now, the same thing applies to when you are doing your analysis. You must look at the left. When you look at the left, this trade was perfect, but it could have hit this stop, your take profit at this level, at this level, at this level, even at this level. But market is now ranging below the TP, so it has created a fresh resistance. So before market break, get your take profit, it must be able to break the new resistance that it is creating to hit your take profit. Now, there are people who would have exited the trade at this point and get a proper entry to continue the trade. So some people would have, as price gets to this level, they would have put their stop loss, may change the color. Okay, so they would have changed their stop loss. Maybe they will put it somewhere here, so that when market didn't hit their take profit and reverse it closes trade for them at this level. So this is a break-even trade or locking of profit or taking partial profit as well. But in most cases, partial profit, you are just expecting that market is going to continue. So you are dividing your volume, which is your lot size, to reduce the risk in trade or risk in running trade. So these things happen. Now, the same day today, market would have had given a break even to this trade, but because it still didn't hit my take profit, didn't hit my stop loss, I'm holding that trade. And then it is something that you learn along the line. Once you are definitely going to become a position trader or a swing trader where you can hold trade for a very long time in a good direction. So that is to those who ask questions relating to that. Now, those who ask questions about pips, you click on these two here. We call it crosshair. And we have the full version is also the same. So when you want to calculate, you can just click on the distance you want to count from downward. So this one gives you the points, the number of points market move from where we take it from to the current level, which is 488.770.770 then it gives you 79 candlesticks as far as what's the name, 15-minute time frame is concerned. Now another way of counting when you look at currency, mostly the middle of the crosshair gives you the pips value. But another way is to subtract. Let's say you are selling, you subtract the price you sold from where market is currently. That helps you to know the pip value on the trade. And then it also gives you how much you earn or you lose when price gets to that level. So this particular trade is 2668173 points. But this asset works on points as well. So when you look at this area of stop loss and take profit, it goes with points. So that's how you can do some of those things. But there's a video that talks about how to calculate pips, and we have the 4 decimal places for almost all assets or all currencies apart from JPY pairs. They go with 2 decimal places. So the video talks about it. So can you look through and then watch those videos to help you? All right, so let's continue and do a recap of what we were talking about yesterday. Support and resistance. Let me just clear. Okay, so you saw the chart like this. Then you want to trade. So those who go with setups, they would have already been in a trade. That is, if they are trading on a 15-minute time frame, they would have been probably a buy. And those who are on a 1-hour time frame would have also been a buy. Then those who are on 4-hour time frame probably are now getting their confirmation to enter a buy. But what do you do first? Now, when you look at the chart, whatever decision or whatever you are going to do comes from your psychology, not always what you learn. If I want to look at this trade, before I will first look at support and resistance levels. I will look at demand and supply levels. I will also look at market structure. I will also look at if there's any trend line that is broken. I also try to see if I can spot some patterns. Now, all those things will conform to my analysis or decision before I do my analysis. Okay, so when you look at this asset, we have a trend line here. We have a short trend line here. So at this point here, this trend line has almost finished doing its work. But should you have extended and that layer, you realize that trend line was broken at this level, and then later retest and touch it double before you going. Then we know what happens when a trend line is broken. Know what happens when a trend line is broken. That's number one. Number two, I will try to spot my support as best, my support and resistances as at best fit. I will be able to spot that. Then also look at my support and resistance zones in collaboration or in relation to supply and demand zones. So when you look at it, you can see a best fit here. You can see a best fit here, where we have 1 touch, almost 2 touch, 3 and 4, 5. So for you to look at it, you can still push it up a little. All these 1, 2, 3, 4 and 5 become your value support, price support. Then we come back to, you can still look at it and capture these weeks as well. We can also have up to this level here as the whole zone. Now when you are making a decision, the probability is that if you are thinking about stop loss at this level, let's say you entered a buy, all this whole area from the first horizontal line to this line can be considered as where market can come and play and do something with your stop loss. So mostly if you want to set your stop loss, you set it in a way that even if market is coming back, you not just come and clear it and go. That's why you use proper risk management in every decision you are going to make in the market. So at this point here, some people would have put their stop loss here, some will put it here, some will put it here, some will put it here. I will put it a little bit below here, so that even if market is coming to play around all these areas, let me just annotate it. Even if market is coming to play around all these areas and clear what we call liquidity, all those who put stop losses here come to clear them before continuing each major move, I will still be in the trade to enjoy the major move. That's what you can do when it comes to making such decisions. The next thing is to look for a resistance. So we'll come to look for a resistance. We can put some around here first, then look for the best fit. So we have 1, 2, 3, 4. We have a little one here as well. And this was broken and came back again. So we now consider this area as a resistance for now. Then you can equally get some things inside. Along the line, we'll be looking at what we call patterns. Yes, I said we'll talk about patterns. Then we'll also learn what is called patterns in pattern analysis, multiple time frame analysis, so that you'll be able to know how market is behaving and why market is behaving at a point. Now, somebody who is good at reversals, the person will be looking at let me zoom out a little. Okay, so you see, when you zoom out, you are not even seeing the chart the way it was. So somebody will be looking at reversal patterns. So the person will say, this is 1 touch, this is 2 touch, this is 3 touch. So they expect market to bullish. Yes, so it has bullish. That's bullish. So the same way, so for now, those who are considering this whole trade, they would have been looking at exiting somewhere here or locking their profit within this range here. And some also expect it to come to this level. Some also expect it to come back to this top level. And then from there, The rest is based on how market is moving or how market created levels when it is coming down. So from here we have a level here. We have a level here. Let me change the color again. Okay, so we have a level here, which is expected to be the next destination. We have some levels at this layer here. We have a level here. We have a level here. That we have a level here. So that is how market to be expected to move. That's how market to be expected to move when it's returning back to the top. Now, sometimes for you to see it clearer, you can look at the daily time frame as well to see where is it really going. And then what we also try to add is which time frame is controlling the market at each point in time. But if you are looking at the 15-minute time frame, you realize that every decision looks clearer, but on a bigger picture. So somebody with this, if you look at on this time frame, the 15-minute time frame, some people will see some patterns here. We can see head and shoulder, inverse head and shoulder at this level that somebody will use to make his entry, and then probably a scalper would have exit the trade already. When you look at the 15-minute time frame, the levels on the 4-hour time frames, where there is actually a distance. When you look at the 4-hour time frame, this is a distance. This whole thing is a distance. Or it looks very close, so you think, oh, it's just a short period or a short trade. But you have to also look at the difference in price as well. Now, when you look at this, you see that there is a level here. This point, there is a level here. Then we get a level here. And each week is here. Then somewhere here, somewhere here, somewhere this level. So if you are setting support resistances for take profit, you look at the levels where market has reached. Then in that order, you're able to identify patterns that it formed at a point when it is correcting itself. So when market is going towards a direction, you don't expect it to just be rally on the way. It must stop and breathe. I think someone said that on the platform today. Let me just see what always happens. So at this point here, I have something that happened there. Okay, so at this point here, something happened there. At this point too, something happened here. So all these that are happening are in terms of pattern, somebody will say it's a continuation pattern because it happens some way. Somebody will have a name, people say peanut, flag, and all those stuff. So all this happening along the line is part of how market is going in a direction. Now somebody will see this and enter a buy and say that, oh, okay, it has sold too much, so it will buy. Somebody will say, oh, it has sold too much, and so it will buy. People always say, oh, okay, where it has gotten to, it has gone too much, so it should have to reverse. But it only do this to do some corrections. Now we call this particular move here like this impulsive move. Impulsive. So this whole area can be a correction. This whole area can also be a correction. this whole area also considered as a correction. Now, this is a trending market. This is the best to trade. When you're able to get your entry at this level, somebody will wait after this move, he or she will get their entry at this level. So maybe the person who also saw it at this level will wait patiently and get his or her entry at this level. Then the person who come and get it at this level will go. So those who move stop loss or those who move stop loss with prices, they will now come and put their stop loss a little bit above this level. And when market break here, you can put it a little bit above this level. Then it means that all these moves wouldn't clear them from the market. So they would hold the trade and exit somewhere here because this is a valid support. Or some people will still want to see if it will go. But this shows more or less like a reversal pattern. That make a little move at consolidating or ranging. Now this ranging on the 15-minute time frame, it looks clearer. We can also look at this as a choky market, where market is not making a real definition of where it is going for you to look at it clearly. Now it also depends on your style of trading, the time frame you are trading as well. Let me clear this. Now when you're able to spot these things, what happens is that it will be hard for you to lose so much in the market. Then let's go to 1 hour for you to look at it again. Now when you come to 1 hour, this whole area, the way it drew on the 15-minute time frame looks different. But at the end of the day, it's a correction. This is also another correction. The market continues. So you don't just see, when you go, we go back to 1 minute time frame, where the people scalpers would have got some opportunity there. But it also depends on the type of scalping you are doing. But if you did not make the trend your friend, you keep trading against it, you will keep losing money. So we drew this line, the trend line, which was broken nicely, retested, where that it shows clearly and beautifully. So if you are a trend line trader with candlestick formation, you would have made your decision. You have the first touch, the second touch, and you see beautiful. So these are things that people battle with when it comes to trading. We can be repeating this same topic every day, and new ideas will be coming every day. Now, when you look at this level, you can also spot something here that could have also helped your decision making. This level. So, this level here, let me bring my shape tool. So at this level here, we have something at this point. We have a touch. This touch here as well. So this touch is, let's say this is 1, 2, 3. So based on the strength, the number of times the market has touched a level, determine how valid or strong is it. This will give you a great impulsive move to make something good out of it. When you draw your analysis very well, you have patience for market to respect what you're expecting it to do for you, right? So when you spot all these things, this can be here for a very long time, then it won't go. So after you've done, just uncheck it like this, and we'll click on it so that the dots will go. So once the dots are no more, this can remain there without shaking or moving. Okay, so now this whole level here respected at this point currently. So for here you use trend line or diagonal line. to spot your move. At this point, you may use a horizontal line to spot what market is doing. Now, though you look at these, you will see a shape here. So let me when you take this into consideration, you have a shape here forming. Have a shape forming. So people will say double bottom, people will say W. But then when it comes to drawing a W, let me just finish up. Okay. When it comes to a W, we have a perfect W where a lot of factors are considered. When it comes to an M, we have a perfect M where a lot of factors are considered. So before you look at the shape and really know what shape is it, you don't come with the alphabet way of saying W or M or V and stuff like that. You just make them decision. So at this point here, those who see it at double bottom would have been going into a buy already. And those who see it as a W will enter after a retest at this level. Will enter after a retest at this level. Now, this retest at this level respected this level. So the probability that this zone is being validated or having the third touch is high. Where is the first touch? This is 1. This is 2. Then it broke it and then confirm it again here. So the level that price could move up to this level and then retest and break this and come and confirm the entry here is a high probability setup. Now, as it is a high probability setup, you have to look at your style of trading. I always tell people that before you look at your style of trading, you must also consider your equity. For instance, this account went as far as $100 and something. So if you are trading with $50, you cannot use this lot size. That's number one. You cannot hold this trade up to this period for it to regain momentum, go your direction. So those things are really necessary to look up to before you even decide the style of trading you are going to go to. I believe this setup is clear enough to give you a view of how market behave, how market react. Now, this is not a currency market, so your analysis should be, let's say, 80% playable, because we have the when the big moves come, it just goes into your direction. So if you capture the uptrend, it's an uptrend. If you capture the downtrend, it's a downtrend. But it is currency that you have to go to the news and check if there is an event, and you make provision towards those events and become a successful trader at the end of the day. All right, so I'm just doing a recap to what we discussed yesterday, and I'm very sure that you get some extra layer of information forming within it that will help your decision making in trading. So we're going to ask questions quickly, then we'll leave this topic, pick another topic tomorrow. Then we have more time, we'll come and go into it as well.